Happy, welcome back. It's great. It was really good to get to know you a little better and do our first interview. So this one, I want to focus on what I consider to be one of the most important aspects of what I consider old school, the honest money movement, or people protecting themselves from the insidious inflation, and that's education. And I look at the Wall Street Silver group, the Reddit group, as being a key to furthering the education about primarily about silver, but the economy in general, what inflation is, how it, is insidious and continues, and it's not a good thing. I mean, you actually are taught in school, at least I was, a little inflation's good. So what are your thoughts about, one, the big picture inflation in silver, but more importantly, how much the educational aspect is going to play going forward as far as getting more people to participate in this market?
I guess as I was saying previously, I think most trades today are very momentum based. So, the CME regulators might say, price solves everything, but I think it's actually the opposite these days, and that higher prices will breed higher prices, which will breed even higher prices, and more people get interested. So in terms of getting more people interested, it's really a breakout, and I think the shorts absolutely know that. In terms of getting people to invest initially, I originally was just more on the Reddit craze. You get enough upvotes, then your post goes to the top and people see it and they'll buy, and then whatever they're buying goes up massively the next day. Just very quick, short term, to thinking more along the lines that you just talked about in terms of getting people to allocate a percentage of perhaps larger, longer term portfolios to precious metals. After being in this movement for 4 or 5 months, I think I agree with that longer term, but I also am somewhat in the boat of, I think there are perhaps, specific decades that, or 8 to 10 year periods that precious metals massively outperform other things, and then they kind of slink away until they're needed again. I just think we are maybe 1 year into another one of those 8 to 10 year periods, and it is still extremely early, and that inflation will be much higher than it has been the past few decades, this decade. So I think people should allocate a percentage of their longer term investment portfolios that are probably some allocation between equities and bonds, and maybe some sector allocation within that. But the bonds and equities are now correlated. They're no longer really offsetting risk. I think that 60-40 theology behind most portfolios is going to die this decade with inflation. And I think people are going to very much wish they had precious metals in their portfolio earlier. And I think there's so much money floating out there in traditional assets that you only need to convince a small percentage of the population to protect themselves by putting a relatively small percentage of their money into gold and silver. And I obviously am biased towards silver. So I think it's a good idea to protect yourself against inflation. I think Jeff Christian's recent presentation where he showed it's not, gold's not very correlated with inflation. That's probably true when you just do a straight up correlation analysis. But when you're looking at something like silver, I don't think it is a direct inflation hedge. So, inflation goes up 2%, silver goes up 2% or 4%. There's some direct relationship like that, which is what would show up in a correlation analysis, a direct relationship. I think it's actually more like hyperinflation insurance. So it's essentially a psychological investment holding that more and more people buy as insurance as the probability of hyperinflation or extreme monetary expansion increases. So if, at any given time, say the 90s, the odds of hyperinflation starting in the next decade was 0.5%, silver might be priced off of that expectation. But then if the probability of hyperinflation increases to 1%, that's still theoretically a very low probability. But now the value of silver should theoretically double on that. The price of insurance goes up as the probability of the bad event rises. So what are the odds that your home gets destroyed by a fire struck by lightning in any given year? Very low, but it's still good to have home insurance. And if let's say something happened in the climate that made lightning strikes 5 times as probable, the value of home insurance the price of home insurance would go up drastically, even if the overall probability of your house getting struck by lightning still remained relatively low. So really what you're buying is kind of optionality. You're buying an option on the expectation of inflation rising dramatically in the future. So if you think that people are going to start thinking more about inflation, worrying more about inflation, and want to have inflation insurance, you should buy essentially a call option on those expectations and invest in silver.
Well said. I have a couple comments. One is, as you mentioned, higher markets bid higher prices that kind of go into a feeding frenzy at times, and you get these parabolic moves. There's a reason for that, and it's not really that well understood amongst investors from my perspective. And that is when you look at a stock or particularly a commodity and it hits a new high, everyone that owns that's long is going to hold because they don't know how high is high.
Absolutely.
So so now there's a very restricted amount because everyone's holding, no one's selling yet. So any new buying could be a rather sparse amount, but it's all new buying, no one's selling. So that will that's buying pressure, forces the price even higher. So now those originals will say, well, how high is high? I think I'm going to hold on. So there's still a little bit more buying pressure that takes it higher. On top of that, the algorithms are all built that way. They're built on momentum.
Absolutely.
So if you see a breakout and big volume, the momentum traders are going to go, and it's just basically it's an algorithm on a computer telling the trader, hey, looky here, silver's breaking out, get on it. And those type of traders get on it in size. So there's a lot to be said about higher prices in a breakout. And I'll just illustrate, the silver market was demonetized in 1965, and silver was actually at the monetary price, $64, $1.29 an ounce. And it got to about $6 in January of 1979, an all-time high. And a lot of people, it was a real return on the investment, but not very significant. But if you were a rank speculator and you kind of took to heart what I just said, that you could find a new high with no upside resistance, everyone that owns at that point is probably going to hold it. Yeah, you held for 1 year, from January 79 to January 80, you went up over 800% in 1 year. And that's the type of momentum you can see in the commodity sector. And there were several other reasons to do what it did. But the point being is that most people would say, well, you buy low, you sell high. I should have bought silver under $2 and sold it once it got over 5 or 550. That's the standard thinking of vast investors that are taught buy low, sell high. But the ones that really understand markets and the algorithms are, let's say, programmed that way, is buy high and expect higher. And
right.
Timing too, because it's perfect timing when you get that signal. But most people, I'm not going to buy it. It's a new high. But silver's a little different, I think, from my experience, I have plenty, that it seems that there are more people that wake up to it, so to speak, that, oh my goodness, I was thinking about buying silver and Oh my goodness, it's over 30. You know, I think we should get it, which would be actually a good time, in my opinion, because, you know, you've gotten rid of a lot of stale longs that are either still holding because they're believers or people that gave up on the market. So you get new buying, and that's going to propel prices higher. So enough said for me. What I would like to have your comment on is silver is different from gold for a few reasons, but one of the main reasons is that it's both money and an industrial commodity. I just finished the June issue, the Morgan Report, and one of the things I picked up on was a new report that was put out by the Market Trend Report, let's see, from the Precious Metals Commodity Management LLC. In this report, going out 10 years, it primarily focuses on silver and printed and flexible electronics. And the bottom line is this report expects to see silver going from roughly 50% of the market to 80% of the market, industrial usage, in the next 10 years. So my question, Happy, is this. Do you see what I've talked about? And you don't have to agree. I mean, you are your own man. We all know that. But I want your thoughts. You see a possible competitive scenario where the Elon Musks need silver to continue to stay in business. At the same time, we're getting into this momentum trading the silver for investors. In other words, investors and industrials are competing for the same pile of silver. Do you see that happening?
Yeah, so certainly I think industrial demand matters greatly in silver. I think it really acts to provide a floor underneath the price over time. You know, even if nobody cared about silver as a monetary hedge, as a scarcity asset, you know, it would be useful to industry. Its price would certainly be lower than right now, when people have continued the thousands of years of tradition of valuing it as a form of money. But it gives it an inherent value floor, and the higher percentage of industrial demand as a percentage of production, I think that floor only rises. And I think it also increases the potential volatility around when investment demand surges, there's less excess available to absorb that new demand each year. So I mean, I certainly think it will drive the price higher. In terms of driving it monumentally higher in some way, you know, going from $12 to $500, I don't think industrial demand could perhaps ever do that on its own. That's going to be a factor of, you know, the investment demand layered on top of industrial demand. And in most of these products, silver is such a small component of the overall cost that demand is very inelastic. It doesn't matter if silver goes up dramatically. They're using silver rather than, say, copper for a reason, for its chemical properties as a metal, being that much more superior. And certainly, you know, some applications that use more of it, such as solar panels, if the price got, you know, astronomically higher, say to 250, 500, 1,000, you know, the numbers that people dream about that I think are possible later this decade, perhaps, you know, they would try to substitute some where they could. But, you know, I think industrial demand is a very potent element thrown into this mix that, say, gold doesn't have as much of, and it very much limits, I would say it limits the amount of water available for the shorts to put out the fire once the short squeeze starts. So it puts both a floor under the price in that it always has inherent value, and then that demand, because it is so inelastic, you know, it's not price sensitive. Once the short squeeze starts going, I don't think industrial demand reducing is going to be the thing that saves the silver shorts. So, I think it's just another element, but in the end, it's investment demand and monetary macro situations that I think will drive the large price swings in silver rather than the industrial side. That's just my opinion, though.
Well, I share it. I've always said that it's really the monetary demand that's going to. The only way it could be pure industrial, it was like Palladium. And Palladium basically is a physical market-driven price. And you can tell that for a number of reasons, but primarily if you look at a chart and see that it made basically a parabolic move, and then once it made that high, it stayed there, and it's gone sideways ever since, which means the market's in balance because for all practical purposes, 100% of palladium is used in industry. For silver to have that situation, it could, I suppose. The trend is obviously going higher, but it's not 100% of the market. Plus, you've got these subsets of investment demand, industrial demand, there's jewelry demand, and there's even silverware demand. Of course, there's a fair amount of recycling in silver, even though a lot of people think that every ounce of silver that's used in industry is in a landfill. It's not true. There's like 165 million ounces, depends which study you look at. But that's a good round number as far as the amount of silver that's recycled. And then, of course, people that subscribe to me, and I'm going to put this out for free for everybody, what I consider to be an asymmetric trade for precious metals.
And
so that's going to increase.
I would say like palladium or rhodium, where it's almost all industrial. They have that advantage of a slight uptick in industrial demand because the supply is so small, can move the price drastically. In terms of creating a squeeze situation, but then gold or silver has the advantage of so much leverage built upon it in terms of, the fractional reserve, precious metals banking system that, those other metals perhaps don't have. So it's, once it does start running, it can run possibly even more dramatically than some of those more industrial metals if, in a hyperinflationary situation, truly, the price is infinity for any of these things. But for gold and silver, especially, their prices would go up much more than, say, the industrial metals because those industries themselves would be facing severe depression in a hyperinflationary scenario. So it's really, are you trying to trade it or buy insurance, in my opinion?
Yeah, I'll just add briefly that you're correct. I mean, it will do more than what palladium has done because, there's nothing like a fear-driven market. And the possibility of this dollar isn't going to be worth as much, 3 months from now as it is now. Silver's the best thing I can buy because everyone else is telling me that. Look at what the market's doing. So, yeah, you can get a huge overshoot, and you'd only get that because of investment demand. You're not going to get that purely from industrial demand, but it helps that you have that. I'll call it almost like a stock buyback program that every year half of the inventory is bought by industry, no matter what. But we're going to go ahead and stop there. I'm looking forward to speaking with you again. Do you have anything that you'd like to say to the silver community as far as where to find you, like on Wall Street Silver? Or
I'm an active online commenter. I tend to post on Reddit when I have a longer, more collected thought I want to, tell the world. But then my shorter blurbs that I tweet out all the time. Again, I said tweet, I'm on Twitter as well. So I'm the Happy Hawaiian on Twitter. If you're looking at my handle specifically, there's no E in the. And on Reddit, I'm just the Happy Hawaiian. Those are kind of the only two places I'm active on the internet currently. But yeah, that's where people can find me. And then I'll also say, and you can put this in one of the segments somewhere, maybe the first one, that I'm very grateful that you picked up the phone the first time I called you. Shortly after my first post, I had, not spoken to really anybody who's, say, like a bigger name or a longstanding expert in the field. and you really helped me to get my feet under myself in terms of understanding this market specifically much quicker than I may have done otherwise. So, you're thanking me for helping bring energy to this movement from, say, the younger crowd. But I would also thank you for, allowing me to do that and allowing me to do it much quicker than I might have otherwise. So, very much thank you for that.
Well, you're most welcome, Happy, and again, a pleasure. We'll call it, we'll end it there. And I'm looking forward to interviewing you more and also others from the Wall Street Silver community, because there's a lot of very creative people and some really good thought patterns and a lot going on there. So plus we need some fresh blood. I think people are probably tired of looking at me and hearing me, although I'm very happy to do it with you anytime I'm asked. But no, it was really a pleasure. We'll have you back again, and just make a great day, and we'll talk to you soon.
All right. Thanks, David.